emergency update. We've just had a break above the recent high, but is it a breakout for all-time new highs, or is it a fake out and we should expect a correction? Well, today we're going to go into the technical details of what's highly probable and what you should be aware of that will give you valuable information ahead of time. So if you like today's content, like, subscribe, hit the bell notification. Let's dive straight into Quant. So this was the last wave count that we did on Quant. We did a video not that long ago. And the key thing you want to be aware of with markets is all driven by psychology, fear and greed. No matter what anyone else says, this is like the most powerful thing when we're looking for fives and threes. And what we're going to evaluate over here is this part of the market and this part of the market and what it's looking like and what you should really prepare for in terms of on the bullish side and the bear side. But knowing that you don't need to know, you can wait for the technical position to tell you, and price ultimately is the best indicator. By the way, if you're new to trading and you want to learn how to really read the fives and the threes, you want to really take my 4 Secrets Crypto Trading Masterclass, it's free. The link is in the description. And we'll just go into some of the basics of what we're covering today, just to take your trading to the next level. Because most people go for lagging indicators, and we're going for leading indicators. And you'll see why when we dive a bit deeper into Quant. So there's really 2 scenarios that are likely to occur. So I'm going to get rid of these lines over here for now. And we want to be aware of a couple of things. First of all, there's a few different types of corrections. This is the most common. It's called an ABC zigzag, the red line. However, this part here has gone over this part over here. It's still possible that it will do an ABC correction, but it's called an irregular. Irregular means that it's not that usual, but the wave B can exceed the previous high and make a new low. That's called an irregular. There's a few other types of corrections. But rather than trying to double guess what it is, what we want to know is there's really only two main outcomes. It could be that this is the ABC correction. We didn't hit something called Fibonacci time, which is most common and typical, but we did hit something called Fibonacci price. So this could be the beginning of a new trend. But what we're going to look at is what would void that? What would be the information that we can leverage that will void that information? This will make perfect sense to you as I go in a bit deeper, because everything is difficult before it's easy. That's just the nature of life. So what we're going to do is we have a trend indicator at the bottom, or a momentum indicator at the bottom. It's called the stochastics RSI. And what we can see is pretty decent that the highs are marrying up over here, the previous highs as well, and this previous high. What we want to do is wait for the momentum to go into this zone over here. If I just grab the color of blue, this line over here. When it crosses over into this zone, we want to evaluate the pattern position. Where is the pattern? Because ultimately it will tell us. So there's a key price point. If the price goes below this point, it's likely that we are going to see the full leg down. If we don't go below this point and we get a bullish momentum reversal, we're probably going to see a trend continuation. So that's where you can know that you don't know, or that you don't need to know to make good money in the markets. So I'm going to draw out a couple of scenarios over here. So again, we saw the first scenario, which was this simple A, an irregular B, and then a C. That's a potential wave count. But what we're going to really focus on is this part. This part is going to be the revealing part to us. This will tell us everything that we need to know. And right now, what do we know? Well, we know that the market's moved up over here. So now this is a wave 1 or an A. Now, if you're not familiar with the basics of Elliott wave, I actually cover, this is one of the 4 secrets in pattern position in the free crypto trading masterclass, just to really identify psychological pattern points in advance. So what I'm covering now is Elliott wave theory, which really just it's one of the best methodologies of reading the markets. A guy called Ralph Nelson Elliott figured this out back in the 1900s, but it applies incredibly well to crypto. So what we're going to do now is going to write, we can put it here or here. There's 2 arguments of this, so we're just going to put it in the middle. But it's really going, this is a 2 or a B. Why am I saying 2 or B and 1 or A? Well, when we're doing Elliott wave counts, wave 1s and A's actually look the same. Wave 2s and B's actually look the same. And it's really the wave 3s that start to identify a different behavior. So I'm going to leave it over here for now. No, actually, I'm gonna leave it for here. So this part of the market, I'm just going to measure. I'm just do a bit of Fibonacci price, and you'll see why in just a second. I'm just going to do it on the side so I can just see what ratio has this moved into. So most common for wave C's is 100% of wave A's. Don't worry about the detail over here. Is mainly what I'm drawing here is saying this is the typical A, B, C zone, and the typical maximum of C is over here. So up here is either going to be a 1, 2, 3 or an ABC. And right now, we do not know. You don't know. I don't know. No one on the planet knows. But what we do know is what will void a wave 3 count and confirm that is a wave C. That's what I want to pay attention to today. So there's an Elliott wave rule. There's actually 3 rules with Elliott waves. And he figured this out in, again, 1800s, 1900s, that the market psychology, the crowd behaves in a certain way. And if certain rules are voided or broken, let's just say, then that gives us valuable information on how the market is feeling as a whole. So the key piece of information here is called the closing price of wave A. So in other words, if I go to the closing line, I don't get into a bit of detail here, but this is valuable. This is the peak, but it's the closing day data on this peak over here. This, if I just change it to black and make it a dashed line so it's easier to see, there's a rule which is wave 4s should not trade into the range of wave 1. So this will be a strong indication that if the momentum, we're talking about this stochastic RSI, moves into what's called the oversold zone below this black line, and the price, if I draw it like so, we're looking at, it looks like a wave 1, a wave 2, and if it does, potential wave 3, but then the wave 4 goes into this range, it voids that is the wave 4, right? So that's valuable information. So what we do with Quant, depending on your position, some people are, you may be holding Quant, you may be shorting Quant, you might be just standing aside waiting for a buying opportunity. But what we can deduce from this is waiting, it'll probably take maybe 3-4 days thereabouts for the momentum indicator over here to become what's called oversold below this black line. And then if the price only retraces a certain amount and not into this range and we get a bullish reversal, that will be a strong indication that we're going to likely to get a continuation to the upside. And then that would confirm for us that this correction is over. However, if we go into this zone, we're likely to see a continuation to complete a bigger degree correction. We covered a lot there. I'm just going to summarize. By the way, everything in life is difficult before it's easy. It's why I've created the 4 Secrets Crypto Trading Masterclass. It will just show you how to do what we're talking about, but I break it down in theory so it's easy to understand. So when you rewatch this video, you'll see a lot more information because with new lenses. So you'll see stuff that you don't normally see. Same thing as driving a car, right? Once you get experience of driving a car, you can just drive better. So let's just summarize. There's 2 scenarios. Is either this correction is already over and this is a continuation to the upside, or this is still the first leg of the correction and we've got an irregular ABC correction happening. What's going to tell us? Well, when the momentum becomes oversold, we will evaluate the price position. If it's below this point, then it's likely to be scenario 2, which is what we're looking at here. If it's not below this point and we get what's called like a wave 4, so then this looks like a 1, 2, 3, 4, 5, then it's likely we've got the first scenario playing out. And that's how you will trade, by the way. Knowing that you don't know is key. Key, absolutely key. Because I know no one wants to be wrong when they're trading, but it's not about being right or wrong. It's about identifying very high probability odds or setups in your trades. You become the casino and then you just trade the odds. So what I would do with Quant, if I was looking to trade this, I would wait for the next bullish reversal and evaluate the price action. If it's not below this price point here, which is around $109, or $108, if it's not below this point and we get a bullish reversal, then we're probably going to see a continuation to the upside. If it is, then a continuation to the downside. There you go. So if you like today's content, like, subscribe, hit the bell notification. Check out my masterclass. I'm telling you, it'll take your trading to the next level. It's unknown information, but the 4 secrets, it'll just blow your mind how you can almost, there is no crystal ball, but it's the closest thing to a crystal ball. Let's finish with a quote from my book. We're going to go with chapter 5. It's Leonardo da Vinci. Simplicity is the ultimate sophistication. There are thousands upon thousands upon thousands of pieces of information, indicators, all these different chart patterns. There's the news, there's the fear, uncertainty, and doubt, there's the fundamentals, there's the tokenomics, there's the roadmap, there's just an infinite amount of information with every single project. Whereas we can really condense everything down to 4 pieces of information. Right? Today, we looked at pattern in a lot of depth. But if you understand pattern, which is one of the 4 secrets, all of a sudden, all of that information is baked in. Combine that with the other 3 secrets, all of a sudden, you've just got a massive edge and you can see what's very likely to occur. And there's always probabilities, never certainties.